Hi, I'm Pete Krull, and we are back with another episode of Dollars and Change, the expert's guide to sustainable, responsible investing. And we are out at the Future Proof Retreat at the beautiful Broadmoor in Colorado Springs, Colorado. And today I am joined by my friend Kevin Baum, who is the Chief Investment Officer at USCF Investments. And we're going to chat a little bit today about batteries and minerals and bunch of fun stuff related to sustainability. So, Kevin, welcome to the podcast.
Thank you very much. Great to be with you.
So, let's start out with who Kevin is and what's your background, how you got to where you are.
Sure. I'm the CIO of USCF Investments. Have a career in commodities. I started with Oppenheimer Funds back in the early 90s. We launched one of the first commodity mutual funds in the 40 Act space, and then moved over to Invesco Power Shares for a short stint before joining USCF about 8 years ago. So USCF is a very commodity focused shop, as I mentioned, and that's what we do. That's what I do.
Okay. And how did you get into the business in general? What was your path?
Sure. Yeah, that origin story was, I think, goes back to probably junior high, Peter. My grandfather was kind of an avid investor, and I read a lot of books, started following markets, and frankly, I knew probably by the age of 13 that this is what I wanted to do. And my first job in the industry was after school part-time at Edward Jones.
Oh, wow.
So, yeah, I knew the path I wanted to be on and have been fortunate to make a career of it.
That's great. Yeah. That's great. And so you have a background in commodities. How did you know you wanted to do commodities, or do you have any stock background or any other kind of investment background as well?
I don't think I had enough foresight to envision that it would happen the way it happened, Peter. I was thinking stocks, obviously stocks and bonds. My family, though, was just career commodities.
Okay.
I grew up around agriculture, livestock, and then primarily energy. My grandfather was with ExxonMobil for 42 years. My father was in the business. My brother went into the business. But it wasn't until I got to Oppenheimer Funds, I can't take credit for the idea. An old colleague, Russell Reed, thought, look, why can't we kind of democratize commodity investing and bring long-only commodity investing to the masses in a retail product? I was at the right place at the right time. Part of that team took over that business a few years later. So just very fortunate to be able to marry kind of the history and the family love of commodities with investing.
That's interesting because I know growing up, somebody sold my parents a commodity at some point, and of course it went to zero and they lost all their money in it. And so that's growing up, that was my experience with it. But they weren't exactly sophisticated investors at the same time either. But I love the origin story. I love where you're coming from in terms of sort of carrying on a tradition. That's pretty cool.
Yeah, thanks.
And so you moved on. Tell us about USCF in general. So it is historically a commodity-based manager.
That's right. Yeah, USCF really started with USO, the big oil fund that most people know. That was the first product. They followed on with other single commodity products, a UNG, which was natural gas, a gasoline product, and one of the better products now is copper, which of course is kind of the new oil, if you will.
Okay.
But so admittedly, Peter, it was a history of those legacy products were the traditional kind of dirty commodities. And look, we all get that there's no such thing as a clean commodity. They all have a carbon footprint, a land footprint, what have you, to produce. But historically in those energy kind of intensive commodities, and more recently we've started leaning into the energy transition, trying to transition ourselves as a company a bit towards a more sustainable approach to commodities with a couple of our products. And so we're really excited about the possibilities there.
Well, I think that's why we're here, because we're certainly on Dollars and Change, not necessarily going to talk about oil and oil security. So let's talk about that transition and sort of the vision it took to say, hey guys, we're going to become dinosaurs, no pun intended, by continuing to invest in the fossil fuel space. How do we start to shift here?
Yeah, I think if we look at kind of history and what it's shown us. We had the age of wood, then we had the age of coal, now we have the age of oil and gas. And, it's not necessarily that wood or coal have gone away. And so I don't know that I'm of the view that oil and gas will go away anytime soon. But I think you and I would agree, and anyone that's looking at the data sees that the genie's not going back in the bottle of the energy transition, electrification.
Not at all.
There's a lot of negative sentiment out there about electric vehicles right now and sales growth. We've heard, Ford make some announcements, GM make some announcements that perhaps, sales aren't meeting some of the targets they had. But I think when you look globally and realize that there were 14 million electric vehicles sold last year, 30% year-on-year growth.
Yeah.
This year we're looking at 20 to 25% year-on-year growth. Maybe somebody was looking for another 5 percentage points, in 24 and having to pull back their estimates. But this is happening.
Absolutely.
And it's not going to reverse. And so, again, we just think that it makes all the sense in the world for multiple reasons. I mean, it's better for the globe, it's better for the population, it's better for all species to do things more sustainably, to lower our carbon footprint. And it's good for investors. Why not lean into this thematic? We think it's one of the mega trends of the next couple of decades.
Absolutely. We tend to agree with my friend Garvin J. Bush from Green Alpha, who's also been on the podcast. They call it next economy. This is where the economy is going. And I've said this a number of times, but I'll say it again. Sustainable investing and investing in this way is the definition of growth investing. It is investing not based on indexes of where we've been. It's investing based on where we're moving into the future.
Very well said. And we try to take that approach and kind of double down on it, Peter, by not only offering an access product for battery metals exposure, but also in the way we're constructing that portfolio. So rather than just looking in the rearview mirror at what metals have people been using, we actually build the portfolio by looking at what's the impact going to be of the energy transition to each of these metals? It may look different for lithium than it does for nickel, or nickel than it does for copper. We're also looking at a 3 to 5 year forecast of usage of those metals to determine how we're constructing and allocating within the portfolio. So we very much conceptually and philosophically agree with what you're saying, that we want to be forward-looking, not backward-looking.
Absolutely. So let's dig into a little bit about how you're putting this particular fund together.
Sure. Well, we primarily focus on derivatives, so that's futures contracts to get exposure, upstream product, direct exposure to the prices of these metals. We know there's a lot of ways you can invest in the thematic. You can invest in Tesla.
Right.
You can buy, the battery producers.
Right.
You can buy lit from Global X. Those are all perfectly good products. What we want to do, though, is to the extent possible, move as upstream as we can, direct exposure to the prices themselves, as I mentioned. That's where the futures come into play. So roughly 80% of ZSB, which is the ticker symbol of this portfolio, will be in futures contracts, lithium, cobalt, nickel, copper, you name it. And then we augment that with some equity exposure to the metals where you can't get exposure in the derivatives market. So that would be graphite, the rare earths, things of that nature.
So that's the companies that are doing some of that work.
Well, sure. We even have a small sleeve of lithium exposure via equities. Most of the lithium exposure is in the futures markets.
Right.
But there you'd have the Albemarles, the names that you would expect to find.
Right.
In the rare earths, you have some of these rare earths are Chinese-based, others are not. But, that's the reality of the energy transition in these metals, is that China is a very heavy dominant player in the space.
And I think we run into a philosophical quandary, if you will, in that it's really hard to get to some of these metals. And the question is, should we be doing it? But at the end of the day, we need to be transitioning over to an electric-based economy. And it doesn't mean that 5 years from now we're necessarily going to be mining these same minerals, but because technology is continuing to move forward. But it's where we are now, and we need to be making steps now because just like you said, the EV train has left the station, that it's not going back. The same thing is with climate change. We're feeling a hit right now, and if we don't move right now with the technologies that we currently have, we are going to get even farther behind than we are.
I think that's extremely well said, Peter. I think when we think about climate change, when we think about our emissions profile, we would love to not even have to use, copper, aluminum, nickel, lithium in these processes. And there may come a day, like you say, where technology advances to the point where, hydrogen is is more realistic. Now, I'm not sure for transportation that's going to be an early adopter for hydrogen. In fact, I think it's going to be a very late adopter.
It's going to be heavy industry for
100%.
Yeah,
100% for hydrogen. I totally agree with that. But
it may be less mineral intensive is probably what I would see.
I would agree with that. But I think you stated it very well a couple of minutes ago that this is where we are today.
Yeah.
And while there is an emissions profile associated with mining these metals, there's no question when you look at the life cycle of a vehicle, an ICE vehicle, a conventional vehicle versus an electric vehicle, it's just a drastic reduction in our emissions when we adopt these technologies. And so, again, I mean, it's happening. It's going to continue to happen. We think that offers good investment opportunities for your clients out there, but it's also good for the planet.
There's also been a lot of pushback on the amount of minerals and supplies coming from China, and how do we alleviate that? Are there other areas of the world or other opportunities in the United States, for example, especially with the Inflation Reduction Act, that's really trying to get as much sourcing from the states as possible? Is it possible? And what's happening to fix that?
Right. If you think about this from the lens of ZSB, our battery fund, those futures contracts are on futures exchanges either in the U.S. or the U.K. or what have you. But, those metals are being produced all over the world. And lithium, you may be in South America, Australia, all over the world. But when you talk about the processing of these metals and then ultimately the battery manufacturing, that's even more than the production of the ore and the minerals themselves. That processing and battery production is predominantly in China, in the Far East. And so you're right, there's no getting away from that, at least currently. I think the IRA, I think some of the enactments you've seen in Europe are certainly going to stimulate some of this build out in the U.S., in the West, and will reduce the reliance on China. And I think that would be a positive development going forward. I think we could talk about the election, and that comes up a lot in the sentiment discussion. But I think once again here, Peter, the genie is out of the bottle. Yeah. And so, while we may not see some of the same stimulus and credit support, that we're seeing today in coming years, depending upon the outcome of the election, a lot of these manufacturing facilities, a lot of these processing facilities are happening in red states. Mm-hmm. The jobs are happening in red states. Yep. So once again, I don't think that genie's going back in the bottle, regardless of the outcome of an election. So I'm sorry, I kind of jumped around on you there.
Okay. But yeah, that's true. I know I go to Georgia a lot, and I pass by. There's a massive battery plant that's I'm not sure if it's built yet or is really close to being built.
Right.
And we see that pretty much across the board. They're great paying jobs. They're forward thinking jobs. They're future jobs. They're highly skilled, and it's something that we need to continue to do as an economy to be as self-sustaining as we can.
Agreed.
Yeah. So one of the things that we always talk about, and this is we've pretty much hit everything that I wanted to touch. Is there anything that I missed that I haven't brought up that you would like to point out?
No, I think you've done a great job of covering the key salient points of this, and I'm glad you brought into the discussion, Peter, the environment, because again, we could talk about investment opportunities all day long, but there's a much bigger item to discuss, and that is the environment, that is the health of the planet, and that's at the center of this discussion. So I appreciate you bringing that into the discussion.
So we'll wrap it up with the same question that every one of my guests gets. And so I'll start out by saying climate change is hitting us. It is certainly not something that is going to go away. We've seen, last year we saw hurricanes hitting Southern California. In fact, not long before we were at the Future Proof Conference or festival in Huntington Beach last year, fires, droughts, everything going on. So in the scope of that's where we are, what gives you hope?
I think what gives me hope is you look at the number of countries and you look at the global population, and we now have emissions reductions commitments from 80% of the planet, right, in terms of population, whatever that number is. You'd probably remember it better than I. That doesn't mean that everybody's going to fulfill a commitment or meet a commitment or obligation, but I gained some hope from that versus maybe where we were 15 years ago in this discussion. I gained some hope just from what we're talking about today and the adoption of electric vehicles, of electrification in general. I mean, we're not even talking today, Peter, about renewable energy build out,
Right.
wind, solar, everything we're seeing there. And again, a lot of this is not because we need to do it. It's now becoming economically viable and the cheapest way to deliver power when we turn to that side of the equation. So that gives me hope. I mean, I do think that regardless of politics, regardless of people's predispositions, the numbers are speaking for themselves and are gonna help drive this. And I think I derive a lot of hope from that.
Yeah, I couldn't agree more. That's a great answer. That's a great way of looking at things. So, Kevin Baum, I appreciate you coming on. We're here in Colorado Springs, and I was here last week, or in Denver last week, and it was like 70 degrees, and now it's like 20 degrees here. So, a typical spring.
Welcome to Colorado.
Welcome to Colorado. I want to remind everybody, please make sure that you are following us and that you like our episodes, and share them with all your friends. We'll be back for another episode soon, so thank you very much. Kevin,
Thanks, Peter.
Thank you.
Appreciate it. Thank you very much.